Alrighty, I do believe we are recording as of now. So, good evening, everybody. This is I can't remember who named it last week, but this is the options class for July 22nd, and I hope you guys are liking this time slot, this Tuesday night at 7 o'clock Central, as I think we're going to keep it here for a little while. Last week we did a Wednesday, but it was the first week out. This week we're Tuesday, and I'm hoping that this works for everybody. So at least this is the majority, the feedback that I got whenever I asked last time. So, okay, DeAngelinas, we'll talk about that here in a little bit. Alrighty, guys, let's get started here. First, I'm not going to talk about the website just yet, the position just yet. I'm going to be very generic and start with the overall market. Here I have the spiders pulled up. It doesn't matter. You can use the spiders. You can use the diamonds. You can use whatever you guys want. Here's the NASDAQs, the QQQs, just to get an overview of what the market is doing and what we see it doing moving forward. So let's just go with the spiders. That's pretty common. That's what I like to use as kind of a benchmark for anything that I do. And let's see what exactly happened today and what we see happening moving forward. Now, if I blow this up, I have a few more indicators on here that I typically normally have, but just bear with me. We can get rid of some or keep them, whatever, but we're looking at price right now, and we can dive into whatever else down the road here. So let me make sure my little drawing tool is up and going here, and we will start to draw and start to talk about it. All right, so we did have a gap up today, guys. We had Monday close kind of like this, and then we actually gapped up today, had a little push down, a little push up, closing, actually selling off into the close, but nonetheless, there's a little gap here on the spiders and on the overall market. So we did have a gap up. Now, they don't always close. I got the question in the live trading room today. Do they always close? They don't always close, but they close 80% of the time. And half gaps close somewhere around 90 to 95% of the time. So we could possibly see a little minor pullback in the markets coming into tomorrow, or at least sometime into the future. So I had some feedback from you guys over the last week, and then actually a lot after today's video from this morning. We made that nice video about the 3 checks and the setups. We actually took a live trade on that video that we sent out, and I had 2 people, believe it or not, ask almost the exact same question. Not to the T, but almost the same question. So I'm actually going to hit on that with tonight's strategy. So I had a couple people say we were pretty extended. Now, I always say we're always extended in an uptrend and so on and so forth. I'm not a counter trend trader, but in situations that we can go ahead and look. So I had more feedback this week looking for long trades over the last 5 days since last week's webinar. People looking, saying, hey, what if we look for short opportunities? You know what? I'm happy to do that. Now, last week, we took a short put spread, meaning we were long the market, but we sold puts for the most part. So we were short a put spread. So this week, I've ran through the things. I don't want to use the same strategy. I kind of want to mix it up and do something else, especially throughout the first month or so. I want to go back and forth and try in different stuff so the individuals in here can look at price differently and kind of get the idea of how to trade these spreads and so on and so forth. So tonight's trade is actually going to be a short position, meaning short the market. So if we're short the market, we want the market to go down. We got a little bit of a triple top going on here. We've had divergence for quite some time on the momentum indication. So we've had prices heading higher to sideways, but the momentum is absolutely selling off. So with that being said, we're going to look at a little bit of volume here. Look at these previous days on volume. We've had lots of volume whenever the market's had nice big down pushes. So tonight we're actually going to look for a short opportunity. I've already found one that I've done some homework. Now the question that I got from the couple gentlemen after today's video is, can we use the 3-check system for trading these daily charts, trading our options? And 100% absolutely. I always say everything I do can be done on all time frames, all markets. So we're going to go ahead and put that to work. We're going to look for a short trade tonight. Now, if this market does push higher, that's fine, because remember, we are taking really, really high percentage trading opportunities in this trading room. So tonight we're going to look for the market to be short over the period of the next 20 to 45 days. The next 20 to 45 days, okay? And so that's one of our parameters. And we're going to go ahead and look for our 3-check system to go ahead and get a nice trading opportunity. Simple enough, guys? Everybody okay with that? Everybody okay with that? So, clear as mud. You always say that, Dave. That's not a good thing. Clear as mud is the opposite of good. But anyways, first and foremost, we want to take care of what we've already done. We are in a Halliburton trade. Let's pull that dude up. We're in a Halliburton position right now as we speak. What we did on Halliburton was crystal clear. There you go. What we have done on Halliburton from last Wednesday, we placed an order to sell the 69 halves and buy back the 68 halves to protect us. So would that put us at a net credit of 27 cents? Sorry it's so chicken scratchy here, guys. I'm doing my best here. So that put us a break even somewhere around the 69, somebody help me out, 69.33, right? Yeah. Okay. So that was break even, 69.33. Where's that at? 69.33, somewhere right in here below that support. So we loved the trade that we had on. We were looking for a nice pop here, anything below 69.5. We took the order right up here, so we had lots to play with here. We had about a 70% probability of success whenever we entered this position. We're going to look at this number a lot in our trading. So we had about a 70% probability of success whenever we entered this position. Now, we've only had Wednesday, Thursday, Friday, actually technically Thursday, Friday, Monday, Tuesday. That's all this trade. So 4 days have traded, and right now it's currently trading at 8 cents. Okay, guys, let's go ahead and I'm going to put this over here, and let me pull over the, here we go. Okay, so currently, let me just go ahead and pull this up. So we're looking for the 69 half, 68 half puts. And we have 17 days left to expiration. Now, I had somebody, who was it? I think it might have been Dan. Now, Dan, I'm not pointing out nothing. Dan said, should we wait till expiration today, or should we go ahead and take it back? Now, guys, my rule is 50% to 75%. 50 to 75%. If we can get in that range and get out successfully, I have no interest in waiting till this thing expires. I have no interest in waiting till this thing expires if we can collect that. Right now, we sold it for 27 cents. Let me go ahead and click on this while I leave these numbers up here. So we're looking at the 69 half. We're going to buy it this time, right? We're buying that vertical because we sold it last time. 69 half by 68 half. Right, guys? Right? We sold the 69. Now we're looking to buy the 69 half. And we bought the 68 half, so now we're going to sell the 68 half. And you see what that's trading at right now. It's currently trading at 8 cents. So, John says he took his offer, 65% profit today at 10 cents. Awesome. Awesome, John. That's where I'm getting to right now. So, Dan, I'm not pointing at you. I just loved your question. I'm going to go ahead and help out the group here. So, my goal is to get 50 to 75%. 75% is me getting a little greedy, but sometimes you can get them quick pops in the market. You can get 75% pretty quick. But if we start to get around 50% plus, I'm looking to take my order off before it expires. Now, with that being said, we sold it for 27. Right now it's trading for 8 cents. We're definitely above that mark here, right, guys? So right about 14 cents would have been our 50% level. So now I'm going to go ahead. He has to go ahead and wait for expiration or take it off here. I will always be taking it off. I'm not going to risk this market turning around. We have a nice profit here. Now we can only get 8 more cents out of this right now. Market has done nothing but had a nice push up, actually broke highs. This thing, if it rolls over, and it's got 17 days, it's got a long time. It could trade back down to these lows in a matter of 2 or 3 days. I'm not going to risk this thing rolling back over and end up trading for something like 35 or 40 cents whenever I could have just taken my greed aside and go ahead and take my 65, as John said, 65, 70% profit here. I will do it every single time, and I'll just take that money and I'll start to allocate it towards the very next trade. So I feel it is better value to go ahead and take your profits, allocate your money to the next trade, rather than trying to eke out the last few cents of the current trade you're doing. Whenever we got 17 days left to expiration, this thing can absolutely roll down against us. We've had a really high percentage entry. We've had it pop in our direction. Let's take it off and let's go ahead and move and allocate that money onto our next position. Does that make sense, guys? That makes sense? But the number I would like for you guys to write down is this 50 to 75%. 75% is a very good trade, very good opportunity. But anytime you can collect 50% or buy it back at 50 cents on the dollar, I think it's well worth it. I think that's a really nice number. Now, it's a ballpark, but it's a really nice ballpark for you to go ahead and shoot for on your positions. And just think, if we can take 50% and we can get somewhere in the ballpark of 80% success rate, and we can manage our losers to very, very small, we're going to be net very, very comfortable with what we're doing as we move forward. But that is for a later discussion once we start to build a track record. Once this room has been, or this trading program has been live for, say, 8 weeks, 10 weeks, something like that, we're going to build up a track record, and we're going to start putting some numbers together, and then we're going to be able to have this discussion down the road. But we want to be aware of what I'm looking for. That way you can have an idea week in and week out what I'm looking for. Now, today in the live trading room, we had this thing trade all the way down to around 5 cents. And we were looking at it live in the live trading room today. And I said, hey, guys, we actually hit 5 cents today on this spread. Now, from now forward, I have all of you on my options program email alert list. So I'm going to do my best to do it all at nighttime. But if we happen to be in the live trading room and I get an alert, I'm going to go ahead and look to do what's best for the trade. Right, guys? I'm going to do what's best for the trade. So like today, I might have been able to take it off for 6 or 7 cents. DeAngelinas tried for 7 cents later on in the day. It didn't quite get her. You can see it's trading at 8 right now. It didn't quite get her at 7 cents later in the day. But nonetheless, I'm going to do what's best for the trade, and I'm going to immediately, if I get a fill, I'm going to send out a blast. And on this blast, I would have said, hey, we bought back the Halliburton for 6 cents. I recommend you putting in an order at 6 cents. If it doesn't get filled, adjust it to, and then I'll maybe send out another email blast at the end of the day, meaning at the end of the trading session, hey, it didn't get filled for 6 cents. Go ahead and put it in for 9 cents for tomorrow's trading. Okay? But that's all going to be in an email alert, because just you guys are on that list, and we'll go ahead and we'll send that out that way. Now you may miss out on a couple cents if you're not in a live trading room, but guys, that's part of it. The way this is set up, it's actually set up for you to go ahead and trade it in the evening times, where you can spend an hour every night after work or whatever you guys have, going over your positions and maybe adding on a couple more positions once you understand what we're looking for and how to look for the right setups here with these trades. Okay, guys. So right now we're going to go ahead and we're going to place an order to buy this back at 8 cents. I'm not positive that we're going to get filled at 8 cents, but if we are, then great. But let me go ahead and let me edit this page. I'm going to put it on the website right now as we speak, guys. I'm not going to wait till later. So let's go ahead and let's add to this. Let's edit this down, and let's go ahead and place this at an place a GTC, so good till cancel, to buy back Halliburton for 8 cents. Okay? For an 8 cents debit. So let me go ahead and let me bold this and change this to red because it needs to be seen. Okay, guys, is this good if we go ahead and do it like this? Or would you guys have another way of going ahead and doing this? Let me go ahead and actually let me do this. Let me copy this. This is no longer valid, so we can go ahead and paste it right there. We're going to place a good till cancel to buy back Halliburton for 8 cents debit. Save it. Okay. And now let's update that. Okay, guys, so now that's going to be put onto the site. And let me go ahead and view the page. We're going to have to come back here when we put a date on the entries. What do you mean? We entered last Wednesday. It's the expiration August 2/14. To close, yeah, thank you, Bill. But good to close, yeah. Let's see here. The date when you... Oh, okay. I will put the date on there, yes. Let me go ahead and put the date on there. But yeah, so we're going to buy it back for 8 cents here, guys, tomorrow. If that does not get filled, I will send out an alert, and it'll probably say, hey, we're going to want to buy this back at, say, 10 cents. Okay? There we go. I already have the, I don't need to comment on the weekly. I have the expiration on there. I have the expiration. Expiration August 2/14, right there. Yep. That's all on there. All right, guys. Is that good enough? So we're going to go ahead and we're going to look to buy it back for 8 cents here. If we get filled in the morning, everything will be hunky-dory, and we will have it updated on the website and through email alert. And if it's not, I'm going to alert you again and say, all right, we're going to look to buy this back at, say, 10 cents or 12 cents, whatever in the world that it needs to be changed to. But right now, we're going to go ahead and leave it at 8 cents, and we're going to try buying this thing back at 8 cents come tomorrow. You can put it at 10. If you want to make sure that you get a fill, put that sucker at 10. Absolutely, man. I encourage you to go ahead and do that. If you want to, go ahead. We're going to shoot for 8, and if it doesn't work out, then we'll adjust it to 10. But right now, we're going to shoot to buy it back at 8 cents. Okay? All right, we got all that covered, guys? Now let's go ahead. Yeah, just go ahead and you confirm and send, and it will go on through. Yes. And I will have all this updated with my account and everything posted for you guys. So I'm going to keep you guys all in the loop. But now that we got that straightened out, let's go ahead and move forward here to our position of today. Now, I had a couple guys ask me to go ahead and a couple guys go ahead and ask me to use my 3-check system whenever taking the trade this time. And I said, perfect, that's fine. So I went out there and I also wanted to look for a short trade, something different. And so I went out and did some searching, guys. You guys know I use a couple different searches. I use Thinkorswim search. I also still use Investool search. Now, I went out there and I wanted to get my 3-check system. I wanted to be a short trade. So that means I had to find a bearish industry and a bearish stock in that industry. Does that make sense, guys? Pretty self-explanatory. So I just did some searches and I found a couple. And I wanted to have a minimum of 500,000 volume, and I wanted it to be optionable. Now, a little bonus was thrown in with this particular instrument. It is not traded on dollar increments. It's traded on every $2.50 increments. So we're adding a little variation to this. We're adding some different stuff here to our trading. So let's go ahead and talk about what we're trading here. Tonight's trade is going to be, going to be in the application software industry, and the symbol for tonight is I, N as in Nancy, F as in Frank, A as in Adam. Okay. So let's go ahead and pull this up. You see, we have this is Investools. You guys are always gonna, since I have it, I don't recommend you guys going out and buying it because it's extremely expensive. But since I already have it, you can go ahead and use mine every week. I'm gonna find us the best stocks for our parameters that I can find. And in this situation here, you see you have an industry that is god awful, and you have a stock that is moving down very nicely. Now, let me pull it up on another chart here. INFA. So, what do we have here? We have a bearish stock in a bearish industry. Bearish stock, bearish industry, and it's pushing to the downside. Now, we need to worry about our 3 checks. I'm going to answer some of you guys' questions right here with this 3 checks. So, we now have bearish industry, bearish stock. We're looking for the markets to eventually roll over in the next 20 to 45 days. That's when we're looking to place our trades. 20 to 45 days, we're looking for the markets to start rolling over. Sure enough, we already have a bearish stock here in a bearish industry. So if the markets start rolling over, we're in really good shape. So even if they don't roll over, we're going to place our options trade here in a place to where the market has to be incredibly wrong for us to lose money. And we're going to explain all that here in just a minute, guys. So with that being said, we have the most recent push down, the anchor leg to the downside. We have fib, support and resistance, moving average. I wanted to find a trifecta for them guys that asked me about this, and here it is. We have fibs. Now we have 38% check. Support and resistance, previous swing low, if that makes sense. And we have the 21 EMA, all at the exact same price. Okay? So we have a trifecta. Not only that, we have our momentum MACD below zero. Below zero. That is huge. Bearish. We have our stochastics no longer oversold. So we have room here for them to roll over. And we have implied volatility up around 37%. Anything over 25%, we're looking to sell premium. So we have implied volatility at 37%. You see the last time it rolled over, it was at 41%. The time before that when it rolled over, it was at 42%. So we are very close here. It got up to 40% before it actually rolled here. So implied volatility, every time it's got up into this range, it eventually rolled over. Why is that good? It's because we're selling premium. We want to sell while implied volatility is high. And if implied volatility starts going down, then premiums are going to go down. And guess what? We're going to buy it back cheaper. So the markets can virtually do nothing, and we're going to still be able to buy it back cheaper. Okay? So I think we found a pretty good stock. What do you guys think? We just got to find the right prices to go ahead and trade here. What do you guys think about this stock? What do you guys think about this stock? You like it? All right, we got a handful of you already. All right, now they're starting to come through. All right, as long as you guys are on the same page as me, we'll go ahead and go through with it. As long as you can explain it, as long as I'm able to explain it, and you guys get it, I think we got a good one, right? It's whenever I explain it and I get a lot of people like, I don't quite get it. That's whenever we got to think, well, maybe this isn't as good as we thought. But as long as we're able to explain it and everybody's on the same page, it should be a pretty decent idea here for a trading opportunity. So with all that being said, we have things. Gosh, dang it, David. That's funny. Oh, man. Anyways, so with that being said, now all we got to do is we got to find some prices that go ahead and meet our parameters with some probability of success that also meet our parameters. So let's move on to the trade tab. We can keep up the right side of this Halliburton or this chart here. Let's keep up the. Let me actually just sorry to drag this around, guys. I want to be very clear. Let me just drag this over so we can see the numbers for this particular trade as we are looking at this. So that being said, let's go ahead and look and see if we can trade this dude. Yeah, right. So let me move this out of the way. Let's pull this dude up here. And let's start talking about what we need to do here. So with that being said, let's go ahead and dig a little bit deeper into some prices here. What are we using? We're using INFA. Oh, sorry about that, guys. INFA, that is our symbol. Now, looks a little bit different than Halliburton, doesn't it, guys? I wanted to go out, I want to use variety over the next at least 2 months, at least 8 to 10 weeks of trading in here. I want to do something different over and over and over to help out the individuals that are learning to trade options. Not everyone is going to have a whole bunch of weeklies, is it? Or even minis. Some of them are just going to have your straight months. And here we go. This is a little bit different story. This is where I wanted to go with this. And we're going to try something new on a week in and week out basis here. So we're looking for what? 20 to 45 days before expiration, right? That's our goal, 20 to 45 days. August, we have 24 days left till this thing expires. There's our winner. So let's pull up this and let's look at some of these. Prices. Now, with this being said, what are we looking for here with this particular instrument? We want this to, if we get aggressive, we have these swing lows here. We're looking to short below this swing low, but we do have these swing lows here at the 618. Now that comes right around the 35.60 level. Now that's a little bit aggressive. It's doable, but it's aggressive. What if we could get price above these highs and get it to meet our parameters? Now, this is going to be something I'm going to poll the audience, and we're going to take the trade based on what you guys suggest here. But we have an opportunity to be short or with resistance here at 35.60 or resistance up here at 30, 37, say 50. Say 37 quarter. Okay? There's our two options. Everybody can see that, and everybody sees why. You have the swing lows in the 618 and the 50. All that comes into play right here. Or you have these swing highs up here at these 37, say 37 quarters. Okay? So we have all them numbers in play. I'm already getting a ton of people say 37 quarter, 37, 37 quarter, 37, 50, 37, 37, 37 quarter. All right, so we have an overwhelming. All right, so I see the group that we have in here. So we have an overwhelming audience that's a little bit more conservative, and that's fine because you guys fit in with me very, very well. You guys fit in with me very well. All right, DeAngelinas. DeAngelinas says 37 quarter is not available. Exactly. Yes, now you're already seeing it. So we have resistance here at 37 quarter on the charts. We want to keep the price below 37 quarter. That's our goal. So we're looking to be short the market. We do not want price to go above 37 quarter before expiration, and we want to collect premium. Why are we collecting premium? Implied volatility, 39%. Anything above like 25%, we're looking to sell premium. Okay? Sell premium. Now this is what we're shooting at for in here. A lot of people won't teach you this. They'll teach you that 50% number. But remember what we talked about last time? We're going to look for a little bit more than that. So, with that being said, what type of strategy are we looking for? What would you guys like to do here? We want to sell premium. We want to be short the market, the overall market, not short, any type of strategy. We're looking for a spread. Okay, I'm getting a couple of you saying spread. Sell calls. We want to be bearish. All right, all correct. There we go. That's what I was looking for, John. We're looking to sell some calls. So, last week we were bullish the market, right? We're bullish the overall market, and we sold puts. So doesn't it make sense that if we want the market to go down, we're going to sell calls? That's what we're going to do, guys. So, now, let's keep in mind, we want this price to stay below 37 quarter. We want to stay below 37 quarter. So what are our options here? What are our options? Well, you see we got the 37 halves. We got the 40s. So as of right now, we got the 37 halves. We got the 40s. We can look at those two prices, right? 37 half and 40s. We can deal with those prices. Is that what you guys are thinking? 37 half and 40s? So if we go up here to 37 half, call, right click, we want to sell a vertical. Now, let's make sure this meets our parameters before we do anything. We have 37 half. Now, if we sell the 37 half, that means, if we sell the 37 half, that means we want price to stay below 37 half minus the premium we collect. So, what do we need to collect to be below 37 quarter? Nothing. That makes sense, guys? If we want this thing to be below 37 quarter and we're selling the 37 half, that means we're already there. Anything we collect is actually going to help us. I probably just confused some of you. But if we sell 37 half, right, we want price to be below 37 quarter. So we're already good. 37 half is already above 37 quarter. So we're good. Anything we collect, I've already had several of you write in, we can collect 27 cents. Yeah, it is a coincidence, guys, that this week we're looking to collect 27 cents, and last week we collected 27 cents. But nonetheless, that's not important. So what's our break even on this? Our break even is the price that we sell plus our premium. So if we're going to collect 27 cents, our break even is $37.77. Okay? So this is definitely above our resistance. Wouldn't you agree? Wouldn't you guys agree? On the same page? We're cooking with grease now, aren't we? All right, so we are in agreement here. Now, checklist number 1, price. Check. We are going to work out here. This works out, right? We're going to look to collect at least 25 to 30 cents when we sell premiums. Let's look to collect 25 to 30 cents. We can do that. We want at least 70% probability. Big star. Let me put a star next to that. 70% probability of success, guys. Okay? That's a little far out for me. Bob's looking for the Septembers. He says you can collect around 42 cents. It's a little bit far for me. I'm looking for a little bit quicker positions in this. But yes, you can definitely look into that and watch it, Bob. That may be something you're interested in. I'm looking for something a little bit quicker. So we're looking for 70% probability at a minimum. What do we have here? Probability of out of the money, 35 half would be 81%. So we're looking at 81% at the 37 half. The 40 is running at 93% for the 40s. So what do we got? We got 37.75. So what are we looking at? We're probably looking somewhere. Now, guys, I'm just ballparking this. Around 82%. The reason I found that is because our break-even is down here a little bit. So we're looking at about 82% right out of the gate probability of success. It's not bad, right? That meets our parameters. It's above 70%, right? I'm getting a lot of chicken scratch, guys, but I'm hoping some of you are writing some of this down because it's the numbers that brings in the strategy that you guys can take this stuff and start applying it to your own system. So we have a minimum of 25% implied volatility, IV, okay? What do we have? 37. Check number 1, meets our parameters. 70% success. We have 82%. Check, meets our parameters. Our support and resistance above break even. Check. It blew it out of the water, right? Before we even took a trade. Right. Everything technically meets up, right, guys? You guys agree? We on board? So let's go ahead and let's right click on here. Sell vertical. Now it automatically defaults to the one that we want, but I want to play with it a little bit with you guys to go ahead and make sure that we're all on the same page. So we're going to sell the 37.5, buy the 40. Now this is what's different from last week. Remember last week we were able to go ahead and do the dollar wide. That's not option. That's not an option here with this particular stock. Okay, that's not an option with this particular stock. So this is a little bit different. Something else you're going to have to play with. Now let's go down, and now here's where you guys got to make your decision. I'm going to guess that 90+% of you are going to go ahead and go with this particular trade. Let's go ahead and move this to 35, and we'll put it at 37.50. And looky here. At the 37.50, you can collect 70 cents. You can collect 70 cents. Let's go up here to the 35s. Oh, I did not mean to do that, guys. Let me go back to this. There we go. There we can collect 70 cents. But the only iffy thing here is you got about 35 plus 70 cents. So your break even on this is going to be 35.70. 35.70. So you got about a 61% chance of this thing expiring. Now, if some of you would rather do that and be a little bit more aggressive, you're going to succeed. You got your opportunity to go ahead and look at this and make a decision. Now, 35.70 comes into play right here. Remember what this high is right here? 35.60. So 35.60 is the swing lows and the 618. 35.70 is your break even on that particular trade. So if you want to get a little bit aggressive, a little bit more risky, as some of you are writing, a little more risky, the higher the payout, yes. Yeah, that's the thing about options. There's always a give and take in options, guys. Always going to be a give and take. So if you are a little more bearish on this position, if you think that this thing is going to drop and you truly believe that, you can go ahead and do a little bit more of an at the money on this position, and you can collect a little bit more change. And if this thing sells off like you think, you're going to make more money. But the other position, your break even is right up here. So here are the two different break even points. It is completely up to you what you want to choose. You can collect 70 cents down here, but you lose about 20 to 22% probability of success. Or if you go up here, you gain your probability of success, but you're going to collect less. John, I think I'm on board with John. I agree with everybody's comments. You guys are all on board, so it sounds like everything we're saying in here makes perfect sense. But I'm going to go ahead and go with John. John says go with the percentages, and I found that to be very, very true. I am somebody who is not going to flip a coin as much as most. I'm going to go ahead and play the percentages. That way I can go ahead and manage in the future and take smaller losses and just continue to base it. Now, could you collect the 70, and if you get into trouble by no, it'll change, D'Angelinas. With the price movement and time, it always will change. Yeah, but the market would have to go nowhere, and yes, you could buy it back for 27. Yes, but yes, we're going to play the odds here, and we're going to look to sell the 37.5 and buy the 40 for 27 cents. Let me go ahead and bring this over here so we can mark this down, guys. Here is going to be the trade for the day. Let me bring this dude over here, and let's go ahead and fill this out together. That's what the trade is for the day. We're going to go ahead and we're going to trade, INFA. We're going to do a bear, because we want it to go down, call, spread. What we're going to do is we're going to sell. What are we selling, guys? What price are we selling? I need a refresher. We're going to sell the 37.5, I do believe. And we're going to buy the 40 calls. Okay? Are we all on the same page there, guys? We're going to collect 27-cent credit. And this is going to take place on the August 14th. I'll put expiration there. What you guys think? We on board? We on board, guys? We on board? I'm so sorry. I need to put this in there as a disclaimer. This is day order. I must put that on there, guys. So this is a day order. Okay? This is going to be a day order, guys. So if it doesn't get filled for 27 cents, we're going to come back there and we're going to alter the position come tomorrow if we still want to take it. Okay, guys? Any other questions here? Yes, John. Yep. All other earnings really haven't done too much for it, so we're still looking for the same thing. No problem, Henry. That's no big deal. There's going to be lots and lots of trades in the future, guys. So, all right, guys. Any other questions? That's what the trade is. We're going to sell the 37 half calls. We're going to buy the 40s. We're going to collect 27 cents on a day order. And the expiration is August. 24 days left till expiration. And on this particular position, let me go ahead and update this. As it's updating, I will go ahead and come over and update it. So on this particular example, let's pull up the chart and let's talk about what we're looking for here. We used a 3-check system here to get in. We have MACD lower. The volatility, implied volatility, is near its historic highs here, where it typically likes to roll over from. We have Fibonacci, we have support and resistance, and we have moving averages, all 100% in our favor. In an industry that's bearish, in a stock that's bearish. Okay? What do we think? We're on board? I see a lot of you say we're on board. We're on board. Everything is looking good. Our break even is going to be 37.77. So our break even is right here. That's our break even. So with that being said, let's look and see exactly real fast. Ready to confirm and send. There you go. I want to show you guys really fast here a little trick for you guys that are newer to trading. Let's go ahead and let's throw up this. Let's go up right up here. Throw in the theoretical price and mark. Now let's look over here. Let's put this thing under single. Let's go to vertical. So all I just did, guys, is I changed the spread to vertical and I changed the layout to theoretical price. Now, for you new traders that are new to trading, I want you guys to use this tool. We're going to hit on this next week even more. And we're going to try to show you guys how to use this stuff as we are using it ourselves moving forward here. So let's go ahead and look here. Here's what we just now did. So we collected 27 cents. That is the current price. Let's say we add a week on here. Say we added 1 week and the price went nowhere. Look at this. We would have made 7 cents just on time decay. A week of time decay. Let's say this stock went ahead and went down. Let's say it went down 50 cents. That's not a lot for this current position. Let's say it went down 50% or 50 cents on this position in a week. We've already gotten our 50% at that position. So in a week, if this thing can go down 50 cents, which is not anywhere near as we got our pullback here, we entered short, 50% is not going to be even retesting these lows. It's going to be in here. If in a week it can have a nice little push down here, you're seeing we could be collecting another trade with a high probability of a quick profit. Okay? Another trade here. As you see, the theoretical price at that point will be 14 cents. Now, let's say that let's just go back and say by Friday, today is what, 22nd? Let's say by Friday. Now, I'm just throwing this out there, guys. Say by Friday, it drops 50 cents. It'll be trading at 18 cents. Let's throw this in here, guys. I want to be real clear. What do you think is likely to happen? Let's say this thing traded down even if it trades to today's low. If it trades to today's low, that's 50 cents, right? Today's low is trading at 34. That would be 50 cents. So if we trade it at 50 cents, now guys, I'm just wanting you guys to play with this tool. I'm just throwing stuff out there. Let's just say tomorrow this thing closes down 50 cents. Where is this thing going to be? That's just if it meets today's low. It's going to be trading at 20 cents, up 7 cents already, up 25% on this particular trade. Not bad there either, right, guys? If we go up to $1, this is stuff I want you guys to play with, especially if you're one of the newer traders in here. If this thing happens to sell off $1 in the next by the end of this week, we're going to be done. We're going to be placing a buyback order on this to buy this thing back between 10 and 14 cents by the end of the week if it can drop $1. Now, let's say this thing goes 2 weeks and it goes up $1. Let's say it goes up $1 in a week's time. What's this thing going to be trading cents at? So it's going to be trading at 32 cents. So it would be down 5 cents if this thing traded up $1 against us $1. Let's say it trades up $1 as we approach expiration. Let's just go to a week before expiration here. We're trading at 0 cents. Buy it back completely. Let's go a little bit further out, up $1. So we are going to profit anywhere underneath. This is just showing you what you're going to be able to buy it back for at the expiration, 0. So as long as this thing trades somewhere in the next 24 days, as long as it trades below what? 37.75. We're currently trading all the way up here at 34. So as long as this thing trades below there by expiration, below 37.75, yes, it is, Bob, but it never really has a big move on it. So we're okay. It's another thing we look at as the earnings. But as long as this thing trades below 37.75 at expiration, we're good. What do you guys think? You on board? Any questions here about this current trade? We've got it put in the books. We got it on the website. It is a day order to collect 27 cents tomorrow. And if we can get this thing to drop in the next 2 days, we're liable to buy it back. If it doesn't drop in the next 2 days, we have a lot of time and a lot of price to go ahead and let this thing work in our favor. Any questions, guys? All right, no problem, Henry. Henry, just email me tomorrow or even tonight. I'll get it to you better that way rather than just trying to remember, because I do get a lot of emails. But yeah, I'm happy to do that for you, man. You're gonna have to review. Yep, no problem. That was a good lesson. Thank you very much for the nice words. Any other questions here, guys? I want to make sure we hit on everything before leaving today. Here's the order. It's out there. The video will get posted onto this site right below this one tonight. So any questions, guys? Any questions at all? Thank you, Henry. Okay, Bill, I actually used Investos. After getting feedback, I get feedback from you guys all the time, and I basically just take all that and I do my best to acquire it into what we're doing here. Whether that's in the live trading room, I'm going to do what's best for the group. But if I get a lot of suggestions, I'm going to take it into consideration, and that's going to be an impact. So if people were looking for a different type of trade and to use the 3 checks. So we went long last week. I'm going to look for a short setup this week. Now, for a short setup, I want to find a bearish industry, and in that industry, I want to find a bearish stock in that industry. So that's all I do. And obviously, I have an account here with Investtools that there's cheaper ways for you guys to do this. You can do it right on Thinkorswim. You can do searches on Thinkorswim. But I just found a bearish industry with a bearish stock, and I went ahead and chose it because it was the best using the 3 checks that I could find. I wanted to use the 3 checks based on the feedback that I've gotten from a couple gentlemen from today's lesson, and I went ahead and I found the 3 checks. It took me 20 minutes to find the stock, but I went ahead and I found it, and here we go. So usually I don't search that long. when I'm searching for my sets, I have certain parameters. If it meets my parameters, I will take it. But I wanted to get that 3 checks in there, so into today's trade. So that's the reason it took me a little bit longer to find today's stock. In the event that it doesn't go our way, what do we do for protection? A couple different things. That's actually something we can maybe implement next week. So let me just quickly draw over here, and there are several different things that we can do. If this thing decides to go and trade up into this range come next week, if it's right here in the middle, there's ways for us to put on a put spread and make this thing an iron condor, so where we collect if it trades here in the middle. If it trades up here in a hurry, I'm going to let it trade for a little bit, because if it trades up here really, really fast, we have lots of time for it to roll over, and as long as it's in this range, we should be able to collect in a week or two. If it slowly grinds its way to the upside, we're going to go ahead and need to take a small loss, because one thing that we do not want it to do is get in the money, and that's something we can talk about in the future. If we let it get in the money, that's whenever the cost of this thing shoots to the moon, and we don't want to do that. But as long as we can stay relatively, as long as we stay below and we stay below our price that we've been discussing with the 37.75, we are going to be just fine as long as time can pass. Yes, it is Poly. But on the other earnings, it's really had no movement, just like Halliburton. We went through the same thing on Halliburton, but it doesn't get big jumps like some other stocks would. So we'll be just fine. At least I'm guessing. So that is that. So anywho, no problem. What do you mean, Shadu? You couldn't pull it up on Thinkorswim? All right, David. Yep. Any other questions here? As far as Halliburton, just type it in and go to the. Do you have the position on, Shadu? You just want to do the opposite. You want to close the order. Yeah, just go to close the order, and it should pull it up for you. And then we are closing it for 8 cents. And if that changes, if that does not get filled and that changes, I will let you know tomorrow. But right now we have an order here to close it at 8 cents. Buy it back for an 8 cents debit. So you could literally just go, and even if you got a position on, you can just go to the 90 or 69 halves and 68 halves and just buy it back that way. You don't have to close an order. You just rebuy it back with an opposite position. So, any other questions here, guys? Any other questions? I appreciate you guys being here. Another really great group, great audience. Thanks for the feedback. Shadu, if you cannot get that figured out, definitely get a hold of me, and we'll definitely get it closed for you, without a doubt. Or even in the live trading room tomorrow morning, we'll get it closed for you. But are there any questions here, guys, before we wrap this up? Tonight went pretty well. We're right at an hour's time here, so that's where we'd like to keep it at. We want to get in maybe a little bit more training next week, talk about some of the prices and how the prices can be fluctuated. But nonetheless, I think we've gotten enough in to fill up you guys' notepads for today and get you on your way. So I think we got another good high percentage trade. I'm going to mark it on the board, and we're going to manage it together. So if there's no more questions, guys, I'm going to go ahead and I'm going to wrap up this room and this class for this week. And I want to thank you guys. I think we got another great position on, and we're going to keep on building on it. We're going to keep on building on these and coming up with the best that we can. So any more questions here? Any more final questions, guys? I want to thank all of you for being here, and you guys have a good night, and I will see all of you next Tuesday. See you next Tuesday, guys. Thanks for all the nice words.